we go. I got you, B.
Can you hear me? Good evening. Can you hear me loud and clear?
Yes, I can hear you. Good evening.
Okay. Yeah, I'm trying to set up my audio to make sure that it's perfect.
Okay.
Yeah, it's good to see you. How are you doing?
I'm fine.
All right.
But the market is not smiling today.
Yeah, I know the market has actually been it's actually been one way or the other because since after the upturn we had around February, March, the market has actually been dancing. It's been dancing. It's up today, it's down tomorrow. So it's even hard for people to define whether we're actually in a bull market or we're in a bear market.
We are not even in a bull market yet. They've already used the bull for us soon. They already killed all the bulls. The one that we're getting is Suya. I get this Suya market. And September, there is always a month. Now we're here again.
Yeah.
Okay, guys. So, like I said, please can we mute? I will mute everybody. So, like I said, this discussion would be more of, we're not teaching, it's just an open discussion, and anyone can have any perhaps question or contribution. So it's just more of an open discussion. So we'll be talking more on common investing mistakes that people make, because I don't know which person's mic is disturbing us. Okay, let me mute. Okay, good. So we'll just be discussing about common investing mistakes that people make in the stock market, and also going forward. So, like I said, it's an open discussion. So perhaps if anyone in the meeting room has any question, you can ask. Then you can also discuss about it. So let me allow my guy to say something first if I talk.
All right. Thank you, Nathaniel. I'm just hoping you can allow me to share my screen, because sorry guys, I've actually been on the road. I've been traveling for one family function to the other. So, but while I was on the road, I was able to use my phone to actually prepare a little slide. Because when we're talking and we're having interactions, when we have slides to actually exemplify what we're saying, it makes people understand it. But it's not as perfect as I want it to be, because I would have liked to capture a lot of things and put it there. But it's okay. We can manage it. So I don't know, Nathaniel, can you allow me to, okay, you just made me a co-host. That means I can share my screen. Yes. All right. So today we're going to discuss common investing mistakes. And I like the way Nathaniel said it. It's going to be an interactive one. So before I go ahead, I know Nathaniel has done a little introduction, but let me just go ahead to introduce myself. My name is Daniels. I'm a civil engineer. I'm a real estate developer. And all through the while, I've actually been working. I've been doing 9 to 5. And I'm privileged because I got exposed to the financial markets early, because my parents actually invested in the Nigerian stock market. And at some point, I caught the interest. I was like, I wanted to know what's really going on there. So that really made me to actually go into these things. I wanted to see what's going on so that I can realize what's going on for myself and then use it to my own advantage. So that's how I got into the financial markets. But with time, I realized, okay, I needed to actually go a little further by diving into the global stock market, because it was actually needed. A lot of things were going on in the global stock markets, and you cannot just stay and miss out on the fund. I'm still invested in the Nigerian stock market at the moment. So my style of investing, I'm a fundamental analyst. I believe in looking at the intrinsic value of the stocks and then making them, looking at the way it is, understanding the business before you actually put your money and all things. So I think that is something, one way or the other, that led to today's topic. So I'm quickly going to share my slide. Let me see if I can put that up. Okay, I think I have it here. Okay, guys, can you see my screen?
Yes, I can see it.
Okay, I think I need to start. Okay, thank you. Thank you for the response. All All right. As I said, my name is Chibi Daniels. Then my name on my Twitter handle is at Chibi Daniels. In case you want to follow me on Twitter, I do talk about a lot of things on Twitter. And then if you want to follow some of the other links to some of my profile, Instagram, Facebook, you are free to stalk me. I can give you any reply you want. So the link tree below can actually lead you to that. So today we're talking about common mistakes in investing. And okay, the first thing we're going to do, we're just going to talk about it in 3 ways. I know the main aspect we're going to spend more time on is when it comes to the strategy. But we're going to talk about it. There are 3 things we have to consider before we talk about everything. So the first thing I want to say is about choosing the right people. And this is the same thing I always like to talk to people about whenever we talk about investing in the stock market. We see a lot of people when they just come to the stock market and you're introducing somebody to assets, cryptocurrencies and all that. First thing they ask you is, what can I buy? And that is actually the wrong question, because you are not supposed to be concerned about what you are supposed to buy. You're supposed to be concerned about, who am I going to follow? Who's going to lead me through? Who's going to be my friend? Where am I going to belong? So as I said here, choosing the wrong people is the first and foremost investment mistake. It's like when you're going out with the wrong friends. A lot of people go out with the wrong friends. Even when they are drunk, they have actually committed something that they are not supposed to do. But due to the fact that they're actually moving with the right set of people, their friends actually protect them and make sure that nothing wrong happens to them, even though they are wrong. But when you see yourself actually mingling with the wrong people, you discover even something unfortunate happens to you, they even laugh at you, they don't guide you through. So the early stage, the first thing when it comes to the investing game, and where a lot of people miss it, is actually people picking. Because people picking is the first thing you do. And good examples of what we have is actually somebody that's actually doing something right. Okay, somebody's saying something. Okay, I think somebody's mic. Oh, sorry for the computer. I thought somebody wanted to ask a question. Okay, so the first thing is actually picking people. If you have the right people amongst you, you have the right people to actually interact with you and all that. You have done the right step first. Later stages is when you talk about picking the businesses. An example is if you see somebody doing the right thing. We have Nathaniel here, we have Broadkeeper, we have good communities. Picking the right people is about picking the right community, picking the right friends. And I'm telling you, people like Nathaniel is like some people you want to pick. Then there's a group I belong to, the World Hackers group. I'm actually the person that's helping with the fundamental analysis there. Is actually a good group. Now, how did I even know that World Hackers is a good group? Any group that you're joining and they actually tell you something about being careful is definitely a good group. And why do I say that? One thing, a lot of people want to get you excited about the market and get you to be in a euphoric mood. But one thing you want to understand that the market is not so easy to operate. So any person asking you to be careful in the market is actually the nice person. They're not just trying to get you all excited, but just trying to get you careful. Now, one thing you notice when you get into the World Hackers group is you notice that people are actually calling you. Okay,
Juwan, please, can you mute your mic?
there?
Yes, I'm there. I'm trying to mute everyone.
Okay, okay. I think I can just ignore the noise, but sometimes I just get the feedback. I think someone was trying to say something. Yeah, thank you. Nathaniel, can you hear me loud and clear?
Yes, I can hear you now.
Okay, good. So the first thing is picking people, belong to good communities. And something I always tell to people when you want to start investing, you don't have to belong to every community. Find the right people. Know the community you want to belong to. Belong to the right community, because when you belong to the wrong community and when you follow the wrong people, you are setting yourself up. I don't know, Nathaniel, have you seen these people that they are just new to the market and they are already following everybody on YouTube and Twitter? I don't know if you've experienced that. You've seen somebody like that.
I just see them. They're always like everywhere. Even at the point, I had to unfollow some people that I was following on Twitter before. Not like they are bad or they share wrong information, but I don't just need them again. And that is one thing people should take note of. You cannot just be everywhere. It's good to be in a, because if you are following everybody, you'll be making mistakes. So imagine a couple now. The husband is going to XYZ church, while the wife is going to ABC church. There will be conflict in the house because the pastor of the husband would say
the doctrine would be
something,
every
the
time.
wife will say a different thing. There would always be trouble. So it's always good to have a focus. So being in a community is absolutely right. You cannot overemphasize the need of a community, because you grow together, you win together, you lose together. But if you are following everybody, you'll be confused, because people have different strategies, people have different ideas of the market, and who you follow determines which information you cling to.
Yes, exactly. I think the last point you made is something I just wanted to point out right now. And there's a reason why people picking comes before business picking. It comes before strategy picking, because the people you are around, that means the businesses you're going to pick. It means the strategy you're going to pick. If you're in a community and all they talk about is meme stocks, no matter how good you are, no matter how disciplined you are, you will see yourself trying to develop strategies around meme stocks. Do you understand? So the first thing you have to do is pick the right people. Make sure the people you are the right people. And as I said, success is a group game. It's not something you do alone. A lot of people want to be the lone wolves. They want to conquer the market and be everything on their own. No, you can't do that. You have to actually work with people. And if you are looking for examples, I just told you that Tarek is a good example. We have the World Hackers Group. World Hackers Group is a good example. It doesn't belong to any platform at all. You can even follow me here, even if you want to. I have a private channel as well, where it's actually anything I'm thinking at the moment that I post there, because I figured out I can bring them together and then make something out of them. So let's just go to the next one. Okay, then the next one is actually the platform risk. I believe, Nathaniel, I need a feedback. Can you still see my screen?
Yes, I can see it.
Okay, good. The next one is something called platform risk. And this is something that is an investing mistake that a lot of people ignore. Now, when you see some people, they just come in, they don't ask, okay, is this, I always value the people that come in and ask, is Bamboo a good platform? Now, a lot of people normally laugh at them and like, why are you asking this kind of question here? But it's actually a good question. They ask, is Trove a good platform? Is Shake a good platform? Because the number one thing you want to avoid, no matter what you're doing, no matter the asset class you're investing in, is platform risk. Now, what is platform risk? Platform risk is the risk attached to the fintech app that you're using, attached to the brokerage app that you're using, attached to the trading app that you're using. So anything attached to the instrument that you're using, that risk is bigger than the risk that you get during your when using your assets. So one thing you want to make sure is you avoid platform risk. So how do you avoid platform risk? You avoid platform risk by choosing the right platform. Remember, we said the first thing is picking the right people, because when you pick the right people, you can ask the necessary questions, and these people will actually guide you into picking the right platform. But when you don't choose the right people, you can already make a mistake, and you're already picking the wrong platform. So you're already in stage 2 error. And something about these mistakes, I think I want to talk about this before we continue, is when you start making one mistake and there's nobody to say, hey, bros, come back, you discover you just continue compounding on the mistakes till there's a place it is, you are just under a catastrophic failure. Let's say you pick the wrong people. Like when you're picking a lot of wrong people and you're listening to them, and then maybe, let's say you've landed to the number 2 mistake, you pick the wrong platform as well. Now you meet somebody, maybe you met Nathaniel or somebody else that gave you the right advice. This platform you're using is like it's fraudulent, it's not even right. Now you can't even figure out that this person is doing something good for you, because when you want to take the advice and make something out of it, you are listening to the people from the other groups that you have actually gathered a lot of wrong people in. So they're telling you, don't mind whatever somebody is saying, continue with what you're doing. You're already setting yourself up. So platform risk is actually something you want to avoid. You want to make sure that the platform you want to know the spread, like you want to know how much they charge you. What happens if you don't trade for some time? What happens when you die? Do these people, will they contact your people as when something happens to you? There was a day we addressed a lot of things about insurance, and with these platforms really contact, because it's nice you actually make a lot of millions on trading in the stock market, you're investing, you're doing crypto, you made your millions. But the next person next door, or the person you feel as your next of kin, you have to ask the necessary question. Will these people contact this person? Assuming I was just crossing the road somewhere and I went for an adventure and no one sees me no more. Will these people contact these people for me to know what's happened? And I have an example of what happened that exemplifies platform risk. And we can talk about another example as well. I know Nathaniel will be very used to this one. Now, earlier in the year, I think that was on December 10th, I bought GameStop. I actually bought it for legit reasons. I was not formally into short squeeze. And I have the screenshots here. These are the screenshots I took. This is not the final one. I think I sold it around 2000 when it actually went up a little more. Now, this is what happened. Exactly at this point, something happened. I was using Trading 212, but they halted my ability to actually trade, because at that point, a lot of people could actually buy more and make more money. This is clearly trading at this point. When I bought for investment reasons. But you consider that, okay, if these platforms can actually ban you, you're already making, okay, I had it close to 2,000%. I believe everyone can see the screen. When you have 2,000% and then they can buy you, now is greater, like the platform risk is not greater than whatever you're making from the assets. So it doesn't matter if you're going to make 2,000% like me. If the platform is going to hurt you, and this is why a lot of people were mad at Robinhood. That's why they even had to answer, they had to go and to the Senate and actually sit, because it's not about the assets. The assets, yes, the assets can be risky. We want to focus on that when we talk about the next strategy. But if you actually do all the calculations you need to do, you do the magic, you use the crystal ball, and then the platform the platform is like the ground you are standing on. No matter what you are carrying, even if you are getting gold and silver and all that, and you are standing on a building that is shaking, when the building collapses, you fall together with the building. So you want to make sure that you are careful with the platform that you are using. Now, I know you remember what happened with Bamboo Trove and Chaka. Normally, when you are classifying this, you classify this as an economic risk. But when the economic risk is definitely not affecting every entire platform under that economy, affecting specific fintech apps or brokerage apps, so you actually classify that as platform risk. So before you start investing, don't just make the mistake of rushing to pick a platform. Make sure you understand the platform risk. People that don't understand the platform risk, like many of them, if I want to just use estimated videos, 90-something% of the people that are coming into the market, the platform they choose, they don't understand the platform risk. If you ask them some certain questions about the risk attached to these platforms, they can't say it. And another thing I wanted to point out is when you come to Ponzi schemes, you can actually identify 99% of the Ponzi schemes if you actually focus on understanding platform risk. We're not talking about the assets. Now, what Ponzi schemes and actually all the I know this is away from the stock market, but it's actually part of assets and we have to discuss it. Now, what happens with Ponzi schemes and some other people that just tell you, okay, we are doing FX for you, we'll do FX for you, bring your money, we'll give you 20% in 2 days. Now, what happens with those people is most times you don't ask them about the platform. Now, one thing, they want to distract you, they want you to focus on the risk that's attached to the assets and try to convince you that there's no much risk attached to the assets. But if you just change your focus a little bit and focus on the platform risk, you can actually identify something that's going to be fraudulent and you can actually escape falling to scams and Ponzi schemes. So platform risk, not picking the right platform, is actually one of the major mistakes.
So let me even cut you a bit. Talking about this platform risk and the Ponzi and everything. So there was one guy many months ago, he actually messaged me on a Facebook, wanting to learn about. So I said, okay, get my book. And he didn't answer, like he didn't say anything. I just like ignoring that. That's fine. That was around, I think, April or March or so. Then in August, the guy now messaged me. So when I saw the and I like went through the chat and I was like, oh, we even had the discussion before. So he was not telling me that he has an issue. I was not like, okay, what happened? He was not giving me screenshots of some discussion. So apparently the guy went to put his money in all this investment something. So they were now sending him chats, but by the time something is already about to like crash, they'll be giving you English and everything. So I started talking. So the guy, the person that was investing with, sent him all this court order or something. When I saw like, they already caught this guy. So it was not telling. So like they were not telling that the government actually placed a ban on the apps that they were using and everything. I was not like, okay, did he tell you the app they were using? He said no. I was not like, okay, did he give you reason why he cannot tell you? He said no. I just saying that, okay, they already scammed you. Because if it is Forex, the government did not ban Forex. MetaTrader is still working. And if it is stocks, they didn't ban stocks. Bamboo is still working, Truth is still working. So as you said all this, I don't know that they've already scammed them. And that's what people don't look after. So even if this is about US stocks, but generally, people just focus on the ROI. And even coming to stocks too, I've had many people ask me, the first question that they were asking that, how much can I make? And I was like, it's not about how much you can make. You can make a whole lot and you can make little. It's all about you understanding the market you are coming into, understanding the business you want to invest in, not just the ROI. Because if you're looking at the ROI, you'll just be focusing on the daily movement of your portfolio, and that won't help you. So I just say, let me just drop that.
Yeah, I think what you said is very necessary. And something I want to focus on is because most times when we invest in Nigeria, we have a little difficulty in Nigeria. We have these platforms that we are not sure of what is going to happen next. So you just want to make sure you focus and understand what is really going to happen next with any particular platform you're investing in before you invest with that platform. So that's very, very necessary. And that's that for platform. Platform risk is like is a risk above, and I actually place people above platform, because if you have the right people, somehow they can actually manage to help you to figure out the right platform. But when you actually fall for a wrong platform, it doesn't matter what you're buying. It doesn't matter if you're losing. If you're losing, it's even worse for you. Because imagine, okay, you're actually making gain, and then there's the platform risk that everybody's afraid of occurs. Then there's a problem. But if you're actually on a loss, let's say you started buying, your entire portfolio is minus 50%, and suddenly the platform is getting they are just deplatforming you, like you cannot continue with that platform. You see what happens is you are going to carry your loss, your capital and everything, and just move away. So platform risk is really up there when it comes to some things that people are supposed to avoid, mistakes that you're supposed to avoid. First thing, get the people, get the platform. Then the next one is actually formulating and sticking with a strategy. Now, something I used to tell people all the time is just something about the wrong clock. There's something they say about the wrong clock. They say the wrong clock is actually twice, 2 times a day. And everybody, if you have a dead clock, I think I have one somewhere here, can actually attest to that a wrong clock, sometimes 2 times in a day, it has to be correct. Now, one thing I always want to talk to people about, or I want people to understand this with is, I just tell somebody to imagine someone just picks up a dead clock and he's walking around and he's just turning the hands of the clock continuously as he's walking around. The chances of that clock being correct, even 2 times in a day, goes away completely. That's what happens when you don't have a defined strategy. That's what happens when you don't stick to a defined strategy, because it's not about the strategy you pick, because you are actually changing strategy from one strategy to the other and all that. And then something I discovered is that when we talk about strategy, a lot of people don't understand what do we really mean by strategy. Now, what we mean by strategy is, I started talking about on the slide, I talk about personally my strategy, looking at the business. But strategy is about how you enter, the amount of money you actually allocate to the particular stock, how much you size it, and how you exit. That is everything about strategy. So strategy is about how you enter, the amount you put there, and then how you exit. If you can actually get these three things right, it forms your strategy. Now, remember, you have to pick the right people, pick the right platform. The next thing is actually, after picking the right people, is like talking with these people and realizing, okay, what do I have to do to actually know this? Do I have to buy for a very long time? And when it comes to strategy, if you don't have the right people, you are going to be confused if you are a trader or an investor. Now, traders, what's the difference between a trader and an investor? As I always say, all investors are traders, but not all traders are investors. So what is the difference between a trader and an investor? It's just the way they actually enter and exit the market. Now, a trader is just interested in looking at the charts, making a very short term, everything short term, without even getting concerned with what's happening on the business. It can be a very trash business, like a business that's not doing anything good. A trader will go there, do the manipulation with the charts, take the money and run away. An investor is actually looking at the health of the business because he's going to stay longer with the business. So, but at a particular time that you are confused, you don't know whether you're a trader, you're an investor, you're already facing a major problem. And that is something that happens when you don't pick the right people. If you pick the wrong people, you are not sure whether you're a trader or an investor. You're already setting yourself up, because sometimes the traders will be saying something, and this is something people confuse a lot. We have if you come to the World Hackers, we have Brothers Keeper. Brothers Keeper is actually a trader who invests as well. And if you listen to me, I'm actually an investor. I rarely trade. So most times, if you look at something both of us are saying, you can even think we are contradicting each other, but we are not. He actually tells you to take your profit at 20, and this is like a very sound strategy when it comes to trading. Whenever it's 20%, take your profit, set your stop loss at 6%. And then you listen to Chibi Daniels, and then you hear something exactly opposite. You hear somebody telling you, don't use stop loss. And this is very contradictory to what Brothers Keeper is going to be telling you. Brothers Keeper is the other guy we have on the World Hackers platform. I'm actually on the World Hackers platform as well. We have other people there as well. So he's saying, take your profit at 20% and all that. And I'm saying, do not take your profit. Let your losers lose and then add to your winners. This is different. This is like contradiction. So, but when you realize the people, you understand the people, you understand, not just understanding the people, you understand the people, you understand if the person is a trader or an investor, you are setting yourself up to actually understand and make use of the right strategy. So that's one thing I wanted to emphasize on. So formulating the right strategy is about you knowing what is your goal. What is your goal at the end of the day? Do you want to be a trader and investor? Are you around traders and investors? Where do you strike the balance? And if you can actually do that, you can actually realize the best platform to use, because not all platforms are good for trading and investing. If you are around the wrong people, like you're around the wrong people, and then they have to choose a platform that's best for investing, and then you listen to another person, he's using, he's a trader, he tells you another thing about trading, you don't even know that the platform this guy is using is best for trading. This is just something I said a moment ago about getting it complicated, because at a point you can actually buy a stock that you're supposed to be trading, you've invested in it, you are down by 80%, and you are supposed to have left when it was 6% down. You are using the wrong platform, because maybe they're even charging you because of the trade. You are using the wrong platform. And to crown it all, you're even around the wrong people. You're like around the wrong people, the people that are going to be telling you something that is not supposed, what you're supposed to be hearing at the moment. So it's good not to set yourself up with these mistakes. Once you figure out the people, you figure out the platform, the next thing is to make sure you get the right strategy. Know whether you're a trader or an investor. And if you get the one you do, stick with it. I tell the people I interact with all the time, I tell them, most times I take 1 trade or 2 trades a day, a month, not a day, a month. Sometimes it can be more than that, it can up to be 5. I don't think I've ever taken up to 5, more than 5 trades in a month. Now, the stocks I trade are the stocks I own in my portfolio. Because these stocks, I actually understand the movement. I'm invested in them. So I have so much of my net worth and everything in them. I understand their movement. I understand what moves these stocks. There's a news that will come out like, it's going to move this stock. I know now it cannot move this stock. But I know the news that can actually move the stock. And I can say, okay, since it's going to move the stock, let me just, I have a percentage allocation I'm keeping in cash. Let me just take 5% out of this and then use it and just take money so I can use it and do weekend. I know that before next week, it's return my money. And I'm very successful when it comes to trading. And don't mistake my success in trading for me being a genius. I'm only successful when it comes to trading because I trade very little, because I'm an investor. So you can't compare my performance with a trader. Maybe he lost some trades and you start comparing both of us. No, the trader is still far more better than me. Because if the trader is taking 100 trades and he's making maybe 60 or 50, me that's taking 1 in a month, you can't compare our success rates. And that's a wrong yardstick to do. So make sure you figure out your strategy. Make sure you figure out how much you are, how you are entering the market, how much you are allocating.
Hello? I think Chibi is. Hello, can anyone hear me?
Yes, I can hear you.
Okay. I think it's his network.
Yeah, maybe somebody called his phone and disturbed the internet.
In and investing. And like I always tell people, know what you want to do. Are you a trader or you're an investor? And he made mention of something that every investor is a trader, but not all traders are investors. And when it comes to trading and investing, I like to adopt the Pareto principle, in the sense that if you're a full-time investor, like you want to invest in the market, it doesn't mean you should not trade. You can invest 80% and trade 20%, because there are some, even if you are investing, there are some opportunities you would see that you would just want to take advantage of it. It can be in the stock that you own, and it can be in an entirely different stock that you decide that, okay, there's a particular news coming up or a particular development in the business of a particular company. You may have it or you may not have it, and you decide that, okay, let me take advantage of it, let me buy, and I'm sure that it's going to increase very high depending on the percentage. And you take that trade and you go. But it doesn't mean, because there's some people that say, I'm an investor, I don't want to trade. There are some opportunities that will pass you and you will not take advantage of it. Not like it is compulsory. No, it is optional, but you're in the market to make money. So when there's an opportunity to make money, why don't you just take advantage of it? So does anyone have any question before Shobik continues with us? Does anyone have any question or anything that is bothering? Let's discuss.
Okay,
Yes,
good evening.
Okay.
Good evening. Sorry, Nathaniel. I was going to ask. Chubby was saying something about platform rates, and
Okay.
the platforms I know about for investment in Nigeria is what's it called? Trove, Chaka, Bamboo. I think I heard
Yeah.
about Passfolio. So I want to ask a question. Since you are ahead of some of us here, you know about Bamboo and the rest. Is Bamboo a better option than any other one, or is Trove better than? But which one do you think is actually better that we can actually still use in case of anything, or in case of future issues? That's my
Okay.
question.
Thank you very much. Okay. Thank you. So, Passfolio is an American-based broker. So it's not based in Nigeria. It is American-based, but they give Nigerians the opportunity, so Nigerians can invest in it. The platform that he was talking about is Stock that is shared on his screen. That one is called Trading 212. That one is UK-based. Before they were giving Nigerians access, but now they don't give Nigerians access, and you cannot even register on Trading 212. But for Bamboo, Trove, and Chaka, they are Nigerian-based companies. So that's let's say, the most popular ones. Like, those are the only ones we have in Nigeria. The most popular is still Bamboo. Now, the thing with these platforms is that Bamboo, Trove, and Chaka, they have a broker in the US called Drive Wealth. So Bamboo is just like a middleman. It's just like a middleman because naturally, like, we cannot have direct access to the US markets. So Bamboo kind of links us with the US markets. So they have a broker, Drive Wealth. So each any accounts that you open with Bamboo, with Chaka, you are actually opening it in Drive Wealth. So that's why when the federal government issue with Bamboo and the rest, when they were saying they are going to freeze account or anything, people were actually concerned. But I made them to know that you don't need to be concerned because the money that you have, it is not with Bamboo. Bamboo is not holding your money. So it is Drive Wealth. So that's why you can move your account from one platform to another. There's one of my friend on the Bamboo Telegram group. He moved his portfolio from Bamboo to Passfolio. So Passfolio is another broker. He moved this. So you can apply to it. You can, because Passfolio and Bamboo, they use the same broker, DriveWet. So DriveWet has the account, so you can just request for it. You send them an email, then they can. So in case of if there's any issue with Bamboo, maybe they want to wind up, or there's a serious threat to the Nigerian government and we will not be able to continue with Bamboo, we can move to another broker, most likely Passfolio, because Passfolio is licensed with DriveWet too. So that is the major risk with Bamboo and the likes is just the government risk. Let me put it that way. Federal government risk. That is one of the major issues with them. No, it's not really an issue because in a way they've not really been any difficulty. But if I want to talk about risk and everything, that is the major thing for like that I know of as at now. That's the major risk with Bamboo and the likes. But you can always move your account, your portfolio from one broker to another. So you can always move your portfolio. So Chubby is back.
Yeah, sorry guys, my internet went off. I was trying to find out what was wrong. I think the Wi-Fi, the battery was running low. As I told you guys, I have to apologize. I just came back from a travel, so I had a long trip. So most of my devices are not charged up yet. So please, I apologize for actually, I had to actually plug it in to get it up to speed. Can you hear me loud and clear, Nathaniel?
Yes, I can hear you.
Yes,
Okay, I'm trying to share my screen, but I couldn't share my screen no more. I think
Okay, let me.
to...
Yes, I'll make you an host. I'm coming. Okay, make host.
Now, something you were saying about the platform, even if you're using free trade, even if you're using Robinhood, you can actually transfer your stocks from Bamboo to even Robinhood. Let's say you're not even in Nigeria, you are now in the USA, you are now in the UK. You can transfer your stocks to from Bamboo to Robinhood, free trade, and every other platform. The only thing is maybe it's going to cost you a little money. It's going to cost you a little money, but you can do that. The only thing with Drive Wealth is if it's under the same brokerage, Drive Wealth is controlling Chaka, Portfolio, Trove, and Passfolio. So if it's under the same Drive Wealth, they are not going to collect any single dime from you. They'll just move it for you for free. But assuming I was moving my stocks from Bambo to Trading 212, which is 100% possible, it's just going to cost you a little fee. It's not like an outrageous fee. So you can actually move your brokerage, you can actually move that and all that. So even if we're talking about platform risk and maybe you discover something that's not good about your platform, don't think that is the end of the road. You can actually always find out a better platform and then move your stocks from the platform 1 to platform 2 that will give you what you want. I hope everybody is clear with that.
Yeah, thank you very much. But I don't know. Anyway, let me just wait.
You can ask your question now.
Ask your question before we go to the next slide.
Okay, thank you very much. I wanted to know if I can move my stock from Stroff to Bamboo.
Yes, 100%. You can actually, you can.
Okay, like the process, do I need to write to Bamboo or to Drive Well?
Yes, send an email. Send an email to send an email to the broker you're using at the moment. If you're using Trove, you have to send an email to Trove and to Bamboo as well. Send an email to Trove. Tell them you want to move your stocks to another broker. No, you don't even need to send an email to Trove. Who you need to send an email to is Bamboo. If you ask Bamboo a question and tell them you want to move your stocks, they will tell you the number to give them from your account number, your name, and some other details. And after you move that, they'll send you a form where you actually state that yes, you are the one that's moving the stocks. And after that, they will conduct the process for you. You don't have to stress yourself about it. Maybe within 24 to 48 hours, all your stocks on Trove will actually be moved to Bamboo. Considering that it's the same stuff that they are doing. Let's say something like Passfolio, they have cryptocurrencies there. If you are moving something from Passfolio to let's say Bamboo are not doing cryptocurrencies at the moment. Just because it's a different asset class, that means you cannot actually move that particular asset. But if it's actually stocks, Trove, Chaka, Passfolio, and Bamboo, all of them are under Drive Well, so you can actually swap any of them to the one you feel most convenient with. So don't get trapped under a platform. If you sense a platform risk, make sure you get the best platform for you. I don't normally advocate unless you are like, I discovered a lot of things. Nathaniel, you notice this on the platforms. I don't normally give a recommendation of stocks, but some people actually come to my DM and they want to arrest me, so I must give them a recommendation. So I just figured out, okay, if I have to risk giving you a recommendation, I might as well collect a fee for it, because when you start crying to me that you lost money, at least I know I ate money and then I'm responsible for something. So yeah, so I actually opened the Patreon group. The Patreon group is not like a mentoring club. It's just where I talk about the stocks I'm buying for the people that said yes, you must do this. And those people are the people I actually openly recommend platforms to. I can tell those guys, pop and plan, don't use this platform. But what I tell to the general public, I don't want to place one platform above the other. What I say is, take a little money, use all of the platforms. Use all of the platform. If you can put a little money in all of them and try. I did that. And if you don't have money, because somebody accused me like I'm just talking from a position of privilege, I have money. That's why I'm telling them to go and use money and put it everywhere. If you don't have money, remember the first thing we said is about picking the right people. If you have the right people and you ask them the right questions, they will tell you the platform that is the best. And then you can use your own initiative to compare these platforms and pick the best platform that is for you. I hope that clears up everything for, I don't know who asked the question, but I hope that clears it up for him.
Thank you so very much. I think I'm very, very clear. Thank you.
All right. Okay, so let's just speed up with this thing. I said everything is under strategy. So the next thing is knowing what to buy. People make a lot of mistakes when they want to know what to buy, because this is a mistake people want to make. Every time they're like, what do I buy? What do I buy? This is the major question. I even ran a poll across most of the platforms when I was still in most of them. As you know, I'm not currently in most of the platforms. I left Bamboo. Most of the platforms, I left them as well, because I'm trying to teach people something. Although I can actually survive in staying on this platform, but I'm trying to teach people that you don't need to stay in all of the platforms. So I just wanted to lead by example by not staying in all of them. Now, when I was in all of the platforms, what I did, I ran a survey. I asked people, what's the greatest problem you have? And this is to show you what troubles the mind. Whenever somebody comes to the market, the first problem they have is, what do I buy? And that is where a lot of mistakes come from, because when you don't know what to buy, you are bound to make a mistake. It's like, Natalia, imagine you are going to the market, you have money, and you don't know the kind of soup you want to cook. You are bound to buy the good ingredients and the bad ingredients and mix them together and then make a very, very, very bad soup. So this is like going to the market and you don't know what to buy. You are bound to make a mistake. And this is where a lot of mistake comes from. So what is the solution to that? What do you do because you don't know what to buy? The first thing is actually asking yourself an alternate question. What shouldn't I buy? What should I not buy? Because if you know the next things to avoid, you can actually know the best things to buy. Let's say you're going to the market and you want to cook egusi soup. Should we use, I think egusi soup is popular, Nathaniel, we can use that, right?
Yeah, we can use egusi soup.
Good, egusi soup, you want to cook egusi soup. What you ask yourself is, what is in egusi soup? And then, okay, if you don't know what's in egusi soup, you ask yourself, what is not in egusi soup? And we definitely know that buying sugarcane is not part of egusi soup. You know that buying flour or sugar, let's say sugar in the market, buying some other ingredients are not part of the egusi soup. So if you can actually identify the stocks to avoid, you actually increase your chances of knowing what to buy. Now, a lot of people come to me and like, what are you going to buy? If you know what to avoid, the chances of you knowing what to buy increases drastically. Because if I was to give you like a poll, I tell you, okay, look at these things, which one are you going to pick? If you are able to remove the ones that are not going to give you what you want, the result you want from the strategy you are going to use, the chances of you picking the right stock is there. So one thing I'm not going to do, and a lot of people are not going to do that, is tell you, okay, your problem is knowing what to buy, and that's how you make the mistake. Oh, yeah, go and buy Tesla. That's not what I'm going to do. If somebody is telling you to go and buy Tesla, it's not me. I can actually tell you I have Tesla. I think I'm up by 85%. I have, no, not 85, sorry. I'm up by 75% on Tesla. I have only 2 shares. So now what happens is, I'm not going to tell you that, but I can tell you what to avoid. I can tell you, okay, if it's very close to its all-time high, and maybe it's not going with sound fundamentals, please avoid it. I can tell you, okay, if it's a hype stock, there's hype stocks that they just hype all the time. The chances of you actually making a mistake there is high. I can tell you to do that. We have overvalued stock. We have meme stocks. I always tell people to avoid meme stocks for a certain reason, because meme stock is not under your control. You cannot do anything about it. So what can you do to meme stock? It's best if you avoid meme stocks, because you are not in control. Unless you are the chairman of Wall Street Bets, the people actually say, go and buy this meme stock. Avoid meme stocks. Somebody asked me, you're always saying we should avoid meme stock. What of you? We just saw you, you ate 2,000 from a meme stock. I bought GameStop in December. By December, nobody was thinking about naming GameStop. Nobody was thinking about anything. I bought it because of investment reasons. Like, I looked at it critically and a lot of things that made me to buy it. I didn't buy it because I was suspecting that was going to be a short squeeze. And that's why I don't normally come out and beat my chest and talk about GameStop, because somehow I benefited from the short squeeze because I was lucky. And if you are lucky, you have to be clear enough to tell people you are lucky at this moment, and not claim like you're like a wizard that actually saw something coming. So if you're not the chairman of Wall Street Bets, don't buy meme stock. Just find out the industries, find out the markets, find out the economies. Like, we know China. Now, you know what's going on with China. A lot of things are going on. The CCP just discovers you are doing well, or you are not progressing, or you're not saying the things they want you to say. They just clamp down on you. It's not about the particular stock doing well. Even if the stock there is doing so well, and the economy is not something you want to go along with, you want to avoid that. So if you can make a comprehensive list of the things you want to avoid buying, then the chances of you buying the right thing to go forward is going to be drastically increased. I don't know if you have any experience of somebody actually not knowing what to buy, and the person just hops in and starts buying a lot of things. I don't know if you've seen anybody do that, Nathaniel.
I've seen.
Yeah.
I've seen.
All right. Yeah. All right. Okay. Let's just go to the next one. Maybe some people can take that. This is an interesting one, because I think this is what led to this conversation. Please forgive my diagram. I did this diagram while I was still coming back. This was done with my phone. I didn't have my laptop and every other thing with me. So a lot of people, I was talking to someone, I think that was day before yesterday. I was like, you're supposed to be investing in the stock market. And I started telling him about buying fantastic companies, because the most beautiful thing about investing in the stock market is you can invest, and these assets will be under your name. You are not buying with Nathaniel's name. You are buying it with your own name. Your own name will be there. And I started telling the person about all the stocks that the person could buy. I talked about Apple and all the solid stocks and what they mean. The first thing the person asked me is like, these ones have gone far. You said they are 500. The price is 500. That means they're gone far now. I cannot buy it anymore. And that's the first mistake we make, because we always feel that the share price is everything. There are some people that they don't look at anything that the share price is above 100. They look at a stock and it's at 1,000. I have a lot of examples, and that's why I say, you guys, I have to apologize, because I could have cited some examples. There's this stock, I think the ticker symbol is SMLR. I hope I'm right about this one. The stock is above 100 and it's actually still almost a penny stock because it actually hasn't hit the $1 billion mark. Now, if you have a stock that's still trading in millions, it's actually a penny stock. It has not hit the 1 billion. 1 billion is almost like the standard for us to know that it's actually going to the middle belt. Now, this stock is actually $100 per share and it's still in the millions. There's a lot of stocks like that. So share price is not what's going to determine what's the overall strength. You want to focus on market cap because market cap actually tells you the story. What share price is I'm going to real estate experience. I know a lot of people who understand this, even though it's not particularly my field. As me, I just bring you inside the room, and the room is so beautiful. You are looking at everything, and I just ask you to estimate how rich the people in the estate are, or how many rooms are there in the building. You are just in one room. You cannot know the true value of the building by just staying in one room. So when you bring all the individual rooms and bring them together, you can actually understand the true value of the building. And then bringing all those individual together, and what you actually get is what we call the market cap. Because market cap is when you bring the individual shares that have been issued and then you market it, then you multiply it by the current price of the stock, you get what is called the market cap. So most of the renowned investors want to look at the market cap of the stock because the market cap of the stock determines how far it will go. If the share price of a stock, I think I want to take my time to explain this. If the share price of the stock is actually $1,000, it looks so big, but the market cap is still $1 billion. It has not gone far. The chances of it actually going further is very much because it still has a lot of room to run. You know, when you are big, the chance of you actually going bigger is not so strong. Let's talk about companies that are maybe in the trillion. We have 6 companies that are that are in the $1 trillion club.
Let me even give another example. So, if looking at the share price, whoever doesn't really know much about Apple will see Apple as a very, very cheap stock in the sense that, okay, it is 100. If you look at Upstart is now 300. So if you don't know about these two companies, you would think, Apple is cheaper, Upstart is very expensive. But now if you look at the market cap, you see that Upstart is still less than 30 billion. It's still less than $30 billion at $300 share price. But Apple is just about 150, 160, but it is already $2.2 trillion. So Upstart still has much room to grow compared to Apple. So when you know about the company you want to buy or the industry you're interested in, you look at the share price and the market cap. Even if you are trying to compare between two companies in the same industry, look at the market cap and the share price. So it will help you to know which one has more room to grow. Because the bigger the market size, it can also affect, in a way, the growth of the stock. Like now, Microsoft I think is already $2 trillion or so. You can't expect Microsoft to grow as fast as Tesla, for example. Tesla would still go faster than Microsoft because of the market cap. Because as the share price is increasing, the valuation also increase. So we should take note of these things too. When you are trying to get a stock, don't just look at the share price alone. A stock can be $500 and it's cheaper than another one that is just 12. Look at Coca-Cola, for example.
Coca-Cola is a lot of people that are new in the market, because it's very hard to explain to somebody that is looking at something and you're telling him the price of this thing is $5, and he's looking at something else and he's saying the price of this thing is $1,000, and you're telling the person this $1,000 is a lot cheaper than this $5. So at the face value, it's very, very difficult for people to especially new people to understand. And I think that's what actually leads to the mistake, because if you're new to the market, and not just you, a lot of people that are even old in the market make that mistake. They just want to buy something that's cheap, believing that it's going to run, it's going to go up. So what they do is they just look at the share price at the face value and like, this one is $1 million. No, I cannot do that. So I think that's what happens there as well. You were given an example with Coca-Cola. Okay, Nathaniel. I think Nathaniel is not here. Okay, let me kindly confirm. Can everyone still hear me? Okay. Your network went off for a minute. Go ahead.
Yeah. Can you hear me now?
Yeah, we can hear you loud and clear.
Okay, continue.
All right. The last thing I want to talk about is total addressable market. Now, you have to note about this because a lot of companies lie about this. Lying is something that's very common in the stock market because a lot of companies want to prop up themselves to make them look big. Now, companies that lie about this are either companies that are small or companies that are big. They lie about this when they release their numbers. Because something about having a total addressable market is, I don't want to go into the mathematical formula because I didn't put it up in the chat. It's like, how many people can you actually sell what you are selling to? Like, how many people are going to be willing to pay for your product? That is what we call total addressable market. And then why do companies normally lie about this? Because even if your market cap is as huge as anything, if you actually convince people that there are still more people in the world that are willing to pay for this, that means your market cap is immaterial. Doesn't mean anything. A lot of people can pay for it. And then these big companies lying about it. And then we have the very small companies that have not actually gotten a big market cap, talking about their total addressable market as well. So they are trying to convince the investors that even though our market cap is small, there are a lot of people that we can sell this thing to. So we are going to move and become like a big company and have a very huge market cap. So even if the market cap seems so big, like let's say it's $1 trillion company, there are still chances that this company that's $1 trillion can go faster than the one that the market cap is just $1 million. If the total addressable market is there, let me just bring down the example. Let's bring it home and make it in a way everybody will understand. Let's say, Nathaniel, you are selling a product. You are selling, let's find something that secondary school students used to enjoy. Should we call this gala? You are selling gala, right? No, don't say, no, you did like this. No, you are selling gala for now. All right, and me, I'm selling chocolates. And we are selling this chocolate and we are actually approaching the school. So, a survey done to this in the school, we discovered that a lot of people in the school, like most of the children, actually like chocolates more than they love gala. Do you understand? Now, if you were first, you actually came into the marketplace, you are selling gala, and then your business has actually boomed so much, and you've been there for years, you are like doing well, you are selling gala, you are now a big guy in the gala industry. But me, I just came in, I'm just carrying an umbrella and one small cooler of gala, and I came in. Now, remember the whole school, every people, like almost 99% will take my gala. Why is you currently, you're just serving 60% of the entire school. That the remaining 40%, no matter what you do, they don't want your product. No, even if you redefine your gala and put extra pepper inside and put omo inside, they don't want your gala no matter what. But 99% of the people want my chocolate. So what happens is if I move into that location, even though you are big, your market cap is already big, you're already doing well. But something you have to understand, you have actually reached the apex of your total addressable market. There's nothing left in it for you. Even though I'm selling one cooler, there is going to be a demand. A lot of people want to buy my own product because 99% of the school want chocolate. So that means I have a better room to run than you that's actually already, like you've actually reached big. So I hope this explains a little bit of total addressable market. So even though the share price is important, you want to just look at the share price and know how the stock is doing today. Because how you want to know whether the stock price is going up or going down, it's not by the market cap. Yeah, the share price affects the market cap, but what they show you an initial value is share price. So after looking at the share price, first thing you want to know that is more important than share price is the market cap. You want to understand what is the market cap of this company because that will determine whether this company still has room to run or not. But after those two, you want to actually focus on how many people are willing to buy this product if you actually divide it. How many people are going to be willing? So even if the products are actually gone up, I think I did the example where I said it's with a small company. As being you're a big company, you understand, you're a bigger company, and your total addressable market, let's just exchange, your total addressable market is 99. You understand? You are just serving 60 out of 99. And I come in, I'm selling chocolates, but my total addressable market, let's say the people, they hate chocolate, is only 40. If you don't understand this, you think I have more room to run than you. But since your total addressable market is 99, even though you had 60% already and you're already big, it doesn't mean that me that is more has more room to run because I can only serve 40 people. It's only 40 people that want to buy my market. And you, even though you are selling to 60 people already, you still have the chance of selling to 99%.
Yeah.
So if you have the chance to sell it to 99%, even if your market cap, your store is already big, you can actually grow faster than me, even though I'm just young in the market. I just wanted to set the examples two sides so everybody could understand. So after looking at market cap, what you have to understand is total addressable market determines the market share, like how much of the market you are going to take at the end of the day. So it's not just about focusing on the market cap. I think I'm just going to go on. I know if somebody will have a question on this, I think they can ask the question much later.
Yes, let us I was thinking maybe we can get some questions.
Okay, no problem. I just wanted to continue and we take the questions later so that we can actually beat the time and all that. Okay, so let's go to the next thing we have on the list. Okay, oh, sorry about that. So the next thing is about when to sell a stock.
Hello.
I think Mr. Gani saying something. He didn't hear that we wanted the questions later. And Nathaniel, can he go ahead? What's the next thing?
Yeah, you can continue.
Okay, now the next thing is about knowing when to sell. Now this poses another major problem because it's not just about buying. A lot of people bought a lot of brilliant stocks, but they don't know when to sell the stock. They have a problem of knowing when to sell. And the perspective I'm actually going to offer here is actually the perspective of an investor. Remember what I said about traders? If you're a trader, you have to actually know how much percentage of loss you are willing to take and make sure you don't take more than that. Because if you're a trader and you don't use your stop loss, that means you are stupid, like you are crazy. Yeah, it's nice to tell people when they are stupid that they are stupid. That's one thing the community can do for you. So if you are a trader and you are not using a stop loss, you're actually stupid. If you're an investor and then you're using a stop loss, I think the reverse is the case. Then you become the stupid one actually. So it just functions some way the other way around. Because now what stop loss does for you if you're actually an investor is going to prevent you from getting your goal. An investor is trying to compound something and build something large at the end of the day. The stop loss is just going to cut you out of it. But if you're a trader, you want to take small gains. And if you don't have stop loss, the market will just kick you out and then you make nothing out of it. So you should know your strategy. Remember, be around the right people, get the right platform, get the right strategy, know what to buy so you don't buy everything. Then the next thing is know when you are supposed to sell. Know when you are supposed to sell. The next thing I talked about not selling your winners is about if you're an investor. Because if you're an investor, you want to compound over a long period. You don't want to sell your winners cheaply. So you want to make sure that you are keeping your winners long enough so that they compound to be something meaningful for you. And there's a chart I have here. This chart is something I made up and I'm giving it to everybody because I want people to really understand this and understand when they're supposed to sell. So the chart is actually going to help anybody that's contemplating on when to sell. I don't know if everybody, can you see the chart clear enough, Nathaniel?
Yeah, I can see it. Yeah, I think if everyone can just zoom into it, you'll be able to see it clearly.
Yeah, okay, this is the chart, and I think maybe I can provide you with this presentation later, Nathaniel. You can share it with anybody that wants to download this particular page and make use of it. So this is definitely for the investors, because if you're an investor, you want to compound over a long period. I just stated some things here. It's like a flow chart. You understand, are you supposed to sell? What's the reason you are selling? Are you supposed to even buy more? Because this contains about buying more and all that. So I believe everybody can go through this later and note the importance of exits. If you're exiting the market, you are supposed to be very, very calculative about it. You know when you want to enter, make sure you are buying the right things, and then make sure you know when to exit the market as well. Because even if you get your entrance right and you don't know when to exit, then there's no meaning to what entrance you've done. You understand? If you know when to enter correctly and then you don't know that there's a time you're supposed to buy more, then you are still making a jest of what you're saying. Even traders, there's this rule, 8-week old rule. I don't know if you know it, is in trading. When I was doing a lot of research in trading, I think that was last year, I learned about it. And it worked for a particular stock I was holding to show you it's an excellent. It's called 8-week old rule. It's not in this chart, sorry. It's not in this particular presentation. Now, 8-week old rule. Oh, should I continue talking about that or should we just continue? It's about trading.
Yeah, I think you can explain this chart so that people would understand it.
Okay, okay. What the chart is actually saying is when you have a position, I think that's the first thing. When you have a position, is a core position. What do you want to do when you want to sell? The first thing is, do you need the money for a non-investing reason? First thing you want to understand is why we invest. We invest so that we can actually live good lives. You can't actually be having health issues and every other thing, and you are not willing to sell your investments because you don't want the loss. You don't want to take away the money. That's being lunatic. So you have to actually know if it's a non-investment reason, and it's very necessary, and it's very necessary, then you should liquidate some of your positions so you can solve that problem. The next thing we want to talk about is if it's actually not a non-investment reason that is very solid, then you shouldn't be investing it. And that's the next thing you can see in red there. You shouldn't be investing it. So, but if the reason you want to sell, why do you want to sell? It's not a non-investing reason. Is it management incompetence? Yes. if the management is incompetent, that means your thesis is broken, because the management is just like, when we talk about the important factors, the management is at the top, because the management determines what's going to happen with your stocks and all that. So if it's management incompetence, that's the reason why you want to sell, then probably you should sell everything. You should probably sell everything. You shouldn't even leave a little. And then if your thesis is broken, there's something going fundamentally wrong. This company was supposed to be producing phones, but we have a manager that came in and said, no, we are not going to be producing phone anymore. We are producing soaps, and the thing is tanking the business and all that. What are you supposed to do? You are supposed to probably sell everything as well. Now remember something: if you are supposed to take for non-investing reason, it doesn't mean you're supposed to liquidate everything you have in your portfolio. Let's say you have $100,000 in your portfolio, and then you want to make use of it for a non-investment reason. It's a healthcare reason or something. And what you need is not just 100,000, you need 20,000. You shouldn't just go and liquidate the entire portfolio just because of that one reason. You should just sell some of it. Maybe sell some of the ones that you are sure of, like they are in green position and they are not gonna affect the portfolio so much. You sell those ones and then make use of what you're supposed to make use of it from. Sorry, there's something called size of the a particular stock becoming uncomfortable. Now, when you buy a particular stock and the size of it is actually going way too down or way too up, then there's an allocation problem. A lot of people make a mistake of thinking allocation problems come only when the stock is going big. There can be a problem with allocation when the stock is actually tanking. You bought a stock and it was actually 5% of your portfolio. Now it's 0.005% of your portfolio. If you are not actually holding that forever, then you have an allocation problem. You should be knowing you are either going to be selling some or selling everything so that you can get away from that mental issue. Then if it's actually getting too big, you're actually risking as well, because you bought a particular stock and it's now 50% of your portfolio. You are at risk. If something happens with the management and everything tanks, you are going to lose a lot of money. So if the position is getting too uncomfortable, you should probably sell some and then leave the rest to run, leave the rest to compound. I'll give you an example. I bought Cell Hedge, Cellulose Holdings. I bought Cell Hedge, I think that was in November last year at $32. I got an email from the people I used to monitor my stocks. So they sent this email that it actually hit, I don't know if it finished the day around that, maybe it finished lower. It's actually hit 96. So, and then I used my Excel sheet to check. I understood that 96 means I've actually made 300% from it. And that particular stock, due to it's been running, it's now at 300%. It has become 25% of my portfolio. Now, that's just an uncomfortable position, because that's like if you split my entire portfolio into 4. So hence is just going to take one part of it. Depending on the strategy you're using, that can be very, very uncomfortable for you. You want to make sure that you are comfortable with the size of every portfolio. But don't be afraid to let some stocks run, because stocks running is what you are good. That's how you are going to outperform the market in the long run. So even if the position is getting uncomfortable, you can see from the flow chart, the thing doesn't lead to sell all. You say sell some, so that you still keep some, so that you can use that to outperform the market. Then if it's actually getting outrageously overvalued against the fundamentals, like the fundamentals and the size of the price of the company don't agree, are you supposed to sell? You are supposed to wait and know whether you're going to fix this, because the thesis is not broken. It's just like people are getting so crazy about it. So if there is a better position elsewhere, yes, maybe you can sell. But if there's no better position, you are not supposed to do that. So, but if it's not overvalued, the position is not too much, thesis is not broken, the thesis is still there, they are still keeping to their promise, everything is still going on well, what are you supposed to do? You are supposed to buy more. And if the thesis is okay, and then you are, everything is going well, but the price has not gone outrageous and every other thing, the price increased a little, what are you supposed to do as well? Or the price is falling, but your thesis is not broken, you're supposed to buy more as well. I think the flowchart is self-explanatory. I just hope everyone could make use of this and then know when to sell a stock, especially if you're an investor. If you're a trader, please don't follow this. If you're a trader, you have your the other rules about 6%, 1%, depending on the trader that you are. Make use of those rules and then and make the best out of it. If you don't have the rules, I think I can provide that. I think Nathaniel can provide a rule for you as well as for trading. And I don't know if Brother Skipper later joined. Brother Skipper is a very good trader. Somebody who wants to make sure that if you are trading, you can ask him for the rules of trading and he'll provide that for you. Let me go over to the next one. Okay, I think we're almost at the end of this, because I think this is the last two. And if I remember any other thing before the questions finish, we can ask those questions. The next is avoid the greed for big gains. You can have fantastic people. No, understand this. This is personal. All these things. The lack of patience and greed for quick gains is something that will lead to a lot of mistakes. You're going to make a lot of mistakes in the market because of this. Now, you can actually pick the right people, pick the right platform, know what to buy, know when to buy, know when to sell. But because you are greedy and then you lack patience to wait for some of these stocks, it's going to make you to do a lot of mistakes along the way. And all those mistakes is going to affect the overall health of your portfolio, which is going to affect the overall returns you have. So first thing you have to understand that the stock market is not like a Ponzi scheme. It's not a get rich quick scheme. It's something that's going to make you rich slowly. So if you're thinking that you're going to get rich very quickly, that's not what the stock market is going to do for you. You actually have to have patience. Know that this thing is going to take time. Then you don't have to get crazy and like, say he made 2,000% from GameStop. I must put all my money in. You may even go and start buying GameStop right now. And that may not actually be the best thing to do, because maybe a lot of people are selling. I don't know what's going on with it at the moment. So a lot of people may be selling and all that. You just have to make sure you are not trying to get quick gains. You have to focus on getting rich slow. Remember, investing is like it's like painting a house. When you paint a house and you're watching the paint dry, the best analogy I like is investing is like planting a tree. If you plant a tree, you don't just sit back and watch the tree grow to a mature tree in one day. It has to take some time before the tree grows. So investment is like planting a tree. And then something about your short-term gains. A lot of people are concerned about the little money you are supposed to get in the short term. And I'm going to tell you this, you can write it down. I said it. If you can actually invest for the long term and then be patient enough and don't be greedy enough, it will get to a period that is just like planting a tree. A tree is not going to provide anything for you in the short term. But if you can be patient enough to wait for that tree to grow, it will provide shelter for you and it will provide food for you to eat. So if you invest for the long term, you are going to reach a time that what you have from the market is going to provide both your short-term needs and your long-term needs. So I think that is where we are going to end the presentation for now. So I'll be happy to take every question that anyone can throw at us. Let me stop sharing my screen for now.
Okay. Thank you, Chobi. And I hope we've learned something in today's discussion. So it is question time. I know he has been talking a whole lot. I just hope it was not too fast for some of us. So please, question, either based on what we discussed or anything that is even beyond what we've discussed, but it is relating to the stock market, please ask. Okay, but you can unmute and ask your question. Bashi, you can.
Okay, Nathan, I think somebody wrote something in the chat. I don't know if you can see that and you can read it out. Maybe we know before Bashi comes in.
The question from the chat, but what you are not going to buy is far more than what you plan to buy.
Yeah. Okay. I think he's referring to what I said. He's like, what you are supposed not to buy is going to be even bigger than what you're going to buy. But people focus so much on what they want to buy that they ignore what they are not supposed to buy. If you make a list of what you are not supposed to buy, you discover that the list is so big. You even know that a lot of things that are people telling you, oh, buy this, a lot of things that are flashing in your eye. That is even in the YouTube, the Twitter, the news and all that. You're going to discover that you are not supposed to buy any of those. So what you are supposed not to buy, there's a lot of them. They are going to be plenty in number. They are going to be more important than what you're supposed to buy. If you make a list of what you're not supposed to buy, the list of what you're supposed to buy is going to be very narrow. And then concentrating and focusing and getting the best out of them is going to be very much easier for you.
What I actually sorry, Bashi, before you ask your question, concerning what to buy or what not to buy, always based on how I approach people that understand the industry to invest in. Because if you know about the industry, you can easily understand everything that is going on there. So know about the industry you want to get into. With that, you will know that it's not everything you should buy. Like me now, I'm not comfortable with biotech stocks. I'm not just comfortable with it because they tend to be very, very volatile. So except if I'm sure that, okay, this particular, I just avoid it. So no matter how good the sector is, I'm not really interested in biotech. Anything medicine or biotech, that is not just my thing. And it doesn't mean those who get into those sectors can't make their money. People are actually making their money, but understand the sector you're interested in. With that, you can even feel comfortable with that, because at times there's market rotation. Some sectors may be out of favor at the present time. So when you understand that sector, you would not be bothered. For example, now, let's say you want to invest in electric vehicle stocks. If you are in the right stock that you analyze, you should know that you will not really be bothered about the short-term gains, because electric vehicle, there's still much room for it based on what you understand about that industry, about that sector. But when you don't even know about the sector, you will never, because there's some people that they're buying maybe from electric stocks and they're expecting to make it big within the next 6 months or 1 year. You'll be confused because you don't know about the sector, and you should know that electric vehicles, they still room for growth in the next 5-10 years. So when you understand that, you will know that even if you don't see it maybe 3 months or 6 months, you will not really be actually bothered. So that's one thing you should look out for. Understand the industry or the sector you are going into. So let me allow Bashir to ask his question. He's raising up.
All right, thank you very much, Nathaniel, and thank you so much, Mr. Chubi Daniel. I must say I've learned so much from this session. This is my first time coming to listen on your platform, and I really appreciate. So I'll take it from my first contact, which is the first point about the platform. I know everybody got to know about the news of the ban on Chaka, Trove, and Bamboo. I've never installed any of them. I've never used any of them. So I've been listening and I've been following Nathaniel post on Facebook, and that opened my eyes to what is opportunity in the stock trading. Because of my background, I am a forex trader, and I would say I'm a newbie in cryptocurrency. I'm not yet an expert in that, but when it comes to forex, I've been there for over 12 years. So, but every platform differs. So from what you just explained, how does this help me now if I want to transit or expand my asset portfolio to include stock trading? How does understanding the platform, like how do I make it the best choice of a platform to use? I don't know whether because some of the things that I've never, because I've not installed the app before, I don't have an idea how it looks like. But because why I paid for cryptocurrency trading when I was going for it was because I know I can trade on Forex quite comfortably, MetaTrader. But when I now get onto Binance, it's a total different ball game. I don't know anything about Binance platform, how everything works there, even though I have the technical knowledge, how to read the market chart and all that. So is it the same thing for if I want to trade on the US stocks using the Bamboo, for example, as a platform now, choosing the right platform? That's my question.
Yeah, all right. Nathaniel, do you want to take this or should I go ahead and take the question?
Okay, let me answer it. So Bamboo is actually built differently. For example, the little I know about Forex is that you use MetaTrader to trade the Forex markets. So there's MetaTrader 4 or 5. I don't know if there's 6, but last I know of it was 5. So, and that helps you with your chart analysis because you cannot invest in Forex. So it is actually trading. You don't buy a currency pair and you hold for long. It's actually trading and everything. So, but for Bamboo was designed for investors. So that's why if you're using Bamboo or Chaka or Trove, you would not see those technical charts. You cannot analyze using technical analysis on Bamboo. It was not designed for traders. It's actually designed for investors. So most times you can either make your analysis, then just come there to buy and everything. So if you want to maybe move from Forex to stocks, or maybe you want to take some of your assets, you cannot link MetaTrader to Bamboo. So you would have to either withdraw some of the money, like the money you want to use to get into the stock market. You can actually withdraw that from your MetaTrader account. Then you can now deposit it in your Bamboo or whichever platform you want to use to buy the stocks. But you cannot link them directly because Bamboo doesn't offer Forex trading. So there's no way you can link it. Adibin Bamboo offers Forex trading and maybe belong to a team partner or something. Just like the way Passfollow and Drive and Bamboo is, you can able to link it, but there's no direct link between Forex or MetaTrader and Bamboo. So you will not be able to link that. So most likely you would have to withdraw the money that you want to use, then put it in your Bamboo, then you'll continue your investing.
Yes, I got that. I know they are not linkable, like the Binance and MetaTrader. They are totally different platforms. That's why I invested time and resources to learn about Binance. I mean, trading crypto on Binance. However, I'm talking about the Bamboo, for example. It's not going to be linked to MetaTrader or Binance, but on its own. I know about Trading View. I mean, I just want to know that before I buy, before I trade, I prefer to be a trader than to be an investor. If I want to be a trader of stocks, where do I do my chart analysis? Is there anything like any platform whatsoever anywhere? But I know that it's a browser-based platform used to stock trading. And how do I? Even though I know I promise I'm picking your book today, so don't worry, I'm buying the book today. All right.
To make a comment. So remember at the beginning, he talked about understanding the platform to use. Now, if you are like a, let's say, full-time trader, Bamboo is not suitable for you. Why? Because Bamboo has commission charges, and when you are trading and your platform charges commission, you will not really enjoy your trade. Because, for example, let's say you make gain of 7%, for example, and you want to take your profit and go, Bamboo will collect 1.5. So overall, your total profit is about 5.5. But by using a commission-free platform, your 7% is your 7%. So Bamboo is not designed for traders. It is not designed, because if you are trading with other platforms that are designed for traders, you can make a trade, you sell, make another trade, you sell. But with Bamboo, if you buy a stock and you sell it and you buy again, you cannot. So there's something called good faith violation. So it kind of limits you from just trading, like buying and selling, buying and selling. So this is why what Chubby said about understanding the platform is really important. If you want to be a trader, Bamboo is not suitable for you. You cannot comfortably trade with Bamboo, because the commission charges and the good faith violation, it would let's say, reduce your chances of making good trading. So if you want to be a, let's say, very good trader, you can consider using Trading 212, although the registration from Nigerians is not ongoing. So there's a kind of limitation. Let me allow Chubby take over from here.
Yeah, I think I wanted to say something about this guy. I like his question. Definitely, I think 10 years from now, this guy will enjoy everything, because when we have tokenized stocks and everything, we bring everything together from FX to stocks to crypto. This particular chairman is going to enjoy everything we have in the market. Right now, if you are dealing with different asset classes, you're going to use different platforms to do that. And then, as I said, I'm not advocating for any platform. I answered the question you asked earlier. Maybe you are not there then. What I said is, if you want to choose a platform, try to make use of all these platforms. Use most of the platforms to buy a little. That's what I did. That's what I advocate for. When you look at these platforms, you can even understand the one that is good for trading or not. Nathaniel went ahead to tell you the one that's better. I don't know. I use all the platforms. I have little money in all of them. But I'm not going to tell you. You have to actually find out for yourself. Or if you're part of a community that are willing to tell you what's the one that is best for you, then you can go. Then you asked something about tools for analyzing. Yes, the same way you have tools for analyzing forex, we have tools for analyzing cryptocurrencies. We have tools for analyzing stocks that you want to trade. We have TraderView. We have a lot of even charts that you can pay for. We have Y charts. We have there's a lot of them. I did pay for some of them earlier because I do want to understand technicals, even though I'm based on fundamental analysis. If you think technical analysis is not important, as a fundamental analyst, you're going to buy stocks that are overpriced as well, because some people will just sell overpriced stocks to you. So there's a lot of stuff that you can use to understand technical analysis the way you understand in forex as well. Y charts, there are many of them. I can even make a list maybe after this and send. I don't know the group. I think I can send it as a private message to Nathaniel, and Nathaniel will send it to the group you belong to, because I don't think I'm in the group that you belong to. So thank you very much for that question. Nathaniel, let's just move on.
Thank you so much.
Okay, Nas, you can ask the question.
Okay. Thank you very much. I must admit that I've learned a lot. Like seriously, I have learned so much that this is actually a premium knowledge shared for free. Because when you discuss about the market caps, I was confused. Actually, around March, I got into this market around March when GameStop was booming like that, like that. So I went ahead I bought one stock like that. I bought it at around $5, but currently that stock is trading around 0.85. So, but I'm using that as a learning curve per se. So when you discuss that, me, I was actually looking at the company with the biggest market cap to buy, even before this class. So particularly, I have learned that. So it's not as if you're using the biggest market caps to buy. So you're using maybe the lesser with potential. So I want to sincerely appreciate that. So I don't know if I want. My question is around the EVs, like the electronic vehicles. Is it good buying electronic EVs or buying semiconductors?
Sorry, come again.
My question is, we have electric vehicles. People like
Yeah.
Tesla, like Neo, and the likes of them. Then we have others that provide those other peripherals like the semiconductors.
Okay.
So, like in your own estimation, which of them do you think will do well?
Yeah, talking about which one would do well. Okay. So semiconductors are part of the, will I say, ingredients that is used in making electric vehicles. So there's something called pick and shovel stocks. So pick and shovel stocks, they don't make the entire products, but they make the product because Tesla has suppliers. So a particular company can just be based on producing so a particular company, they can just be that they are focusing on batteries for electric vehicles. They will not make the car themselves, but produce the batteries that the electric vehicle companies will use. There are some that like the semiconductors and everything. So you can actually, it now depends on you and maybe your strategy or some. You can decide that, okay, if this semiconductor company has huge, like talking about what Choppy said about total addressable markets. So let's say XYZ semiconductor company, they supply maybe 5 of the biggest electric vehicle companies. You can decide that, okay, this particular company has huge market. They are supplying the biggest companies in this segment. You can decide that, okay, I think I'm interested in this. Let me add. So because you may not want to, now depending on you can say, okay, instead of me buying Tesla, buying 5 different electric vehicle companies, I can also decide that, okay, let me buy the company that supplies these 5 companies. So instead of me having those 5, I can choose that, okay, let me have the middleman. So irrespective of whatever is happening to these 5, I would also be benefiting from it. So that is another, will I say, investment strategy on its own. Pick and shovel stocks and that strategy. So you can decide, okay, you can also have a right of both too. So you can buy shares of the semiconductor or those companies that make the products, and you can also decide to buy from the final product. It depends on you. Like me now, there's one stock in my watch list is Lithium America. So they produce lithium that is in the batteries, and based on everything, I decided I'm interested in this company too. So even though I have my own favorite electric vehicle company, I also want to benefit from this company too. So there's nothing wrong in having semiconductor or pick and shovel stocks. That's another strategy on its own. You can decide to partake from both of one. It's
Thank you very much.
Okay. Good evening, everyone. So can you guys hear me?
Yes, I can hear you, Collins.
Okay. Thank you, Nathaniel, and thank you, Chovy, for this wonderful presentation. Well, my own, okay, I have issues actually because I think Chovy was really, really fast. He was trying to cover up a whole lot, so I didn't really get much. And yes, I want to ask a question. You talked about using platforms to understand, and I think you were talking to Mohammed. I don't know, I've forgotten his name. But you're talking to someone about using some platforms to understand charts and the rest. Well, my question is this: for companies, we need to actually read about them, and I know about Yahoo Finance. You can use Yahoo Finance to check a whole lot. For instance, like if I want to check for other companies, like some companies that probably I can't get full information from with Yahoo Finance, what other place can I go to get information? Especially if I want to check the value of the stock, the founding partners of the stock, people that have invested in that stock, people that number of shares that people have, just those necessary information. Apart from Yahoo Finance, where else can I go? I'm throwing these questions to you and Chubby. Thank you.
All right, I want to take this because something he said is not correct, and I want to address that. Nathaniel, can you hear me loud and clear?
I can hear you. I can hear you.
Okay, yeah, something he said is he said I asked someone to use platforms to evaluate stocks. No, somebody asked a question about what is the best platform, and I told the person use all the platforms to make sure you understand what is the best platform for you. The platform is not for evaluating the stocks, because I said something about platform risk. Platform risk is better, it's like way more, it has way more consequences than the asset risk. So even if you're buying the best assets and you are doing it on the wrong platform, you are still going to lose. Maybe the way they are going to tax you, maybe they are spread, maybe the platform is going to get the platform totally. So you have a bigger risk with the platform. So that's what I talked about platform. I was not talking about the assets. And then the second question you were asking about there are a lot of things you can use. I think I just mentioned Y charts. You have Yahoo Finance. Apart from Yahoo Finance, you have Simply Wall Street. You have micro trades. You have Seeking Alpha. There are tons of them. I'm subscribed to a few actually. So there are tons of them. We can list them out. Sorry, Nathaniel, you said something.
I said you can even use NASDAQ website. NASDAQ.
Yes.
So you can get
NASDAQ
NASDAQ
website. Yeah, you can actually get the filings directly from there.
You can see maybe shareholder listing. Maybe if they are, maybe institutions are buying more of the company or they are selling their shares of the company. You can get. Let's go to NASDAQ.com. NASDAQ.com. Then on the search button, put the you can get information that you need. Okay, because of time.
I think there's a question in the chat. I don't know if you can read that out before we take any of them.
What are merchants using as a stock trader? Let me allow you to answer it.
All right, as a stock trader, it depends. It depends. Even an investor that's investing for the long term can actually lose a lot. Now, it's not about the pots. It's about what you are cooking. Now, remember, the same hot water that makes the potato to get soft actually hardens the egg. So, as a stock trader, yeah, a lot of people will tell you your chances of losing is there. But if you keep to a very good strategy and then you are doing a lot of things right, you can actually make a lot of gains. But overall, people have actually weighed it statistically, historically. The people that invest stand more chance of making more money than the people that are trading. That's why the best communities, we always say this in Wealth Hackers as well, that even if you're a trader, always find a room to invest. And that's where you see people like Bros Keepers, they come around, they tell you that, okay, you are actually buying this to trade. They tell you, okay, this one, you are not trading it. Keep it for the long haul. So you always have to find the balance. It doesn't mean that you cannot make a lot of money when you are trading. But if you can, because we know that the chances of you making a lot of money and not losing when you're investing is higher. So if you can actually invest as well when you're trading, that would be fantastic. I hope that answers the person that asked. I think that's Pascal. I hope that answers your question, Pascal. Okay. I couldn't hear you, sorry. Yeah, I can hear you loud and clear now. I didn't hear what you said previously, sorry.
Okay, I'll say that we'll try and round up the meeting before 10, or not before 10. So whoever has any other question can ask, so that we'll be answering the question as fast as possible. So please, if you have any question, ask your question. Nobody asked.
Okay, I don't think there's any other questions. Are there any other questions?
Not sure.
No, I don't have a question, but a comment to make. Can I go ahead?
Yeah, go ahead.
Yeah, go ahead.
Okay, Nathaniel, I just want to make a compliment that you are looking very, very handsome and youthful. And the last seminar you did, your mom was there, so you look so much like her. A beautiful woman. May God bless her for you and bless you for us too. That's my comment. And Dr. Chubi, you are too loaded. Please go and get a PhD in stock trading. You know.
That's a compliment.
All right.
Thank you.
Thank you so much. All right.
Who else has any question? If
Okay,
nobody has any,
Nathan, I don't know if you're still there, but I think I can't get any other response right now.
I'm think chat. Okay, so for the recording will be made available to everyone. So the recording will be made available to everyone. I'm going to let's send my number to the chat because not everyone is in a group. So this is my WhatsApp number. So if you need to just send me a message on WhatsApp so that I would get the recording available for you. So if you don't send me a message, you will not be able to get it because I will not know who actually needs it. So anyone else have any question?
Chubi, can we have your WhatsApp number too?
All right, my WhatsApp number. Yeah, I'll type it out in the chat. Or should I even give it to Nathaniel to provide for you guys later? I prefer to relate to you guys on Telegram. So even if anyone is messaging me on WhatsApp, I'll still refer you to Telegram. I think I just sent that. That's my number. Yeah, I'm not. It's not a secret. That's my WhatsApp number. Anybody can message me, but definitely I'm going to refer you to maybe my channel or my discussion group. We don't talk a lot there, just for direct communication and all that. So feel free to message the number and then we'll talk.
If there's no question, we can stop so that people can.
Okay.
Okay, Nathan, I don't think there's any other question.
So we can. So thank you guys for coming in.
Thank you. Oga Daniel.
Guys.
You should be
learning.
This has been so expository and helpful.
Thank you very much.
I'm connecting all the way from Taraba State, and I think this is the best platform.
Wow.
Yeah.
Thank you very much. So thank you guys. Have a good night, right? Yeah.
Good night.